Welcome back, everyone. My name is Michael LeBlanc, Senior Portfolio Manager at Canaccord Genuity Wealth Management. Thanks for joining us again this week, where we talk about everything that's going on in the markets last week and what we see coming up this week, and just give you a general update. As always, keep in mind everything we cover on these videos is for information purposes only. Always do your own due diligence, or reach out to us. Go to mikeonmoney.com. You can reach us there. Our portal has other videos, other educational things you can sign up for, our weekly newsletters that can keep you up to date, but also all our contact information. So give us a call, an email, or you can book an appointment right there. We're happy to talk about what your questions are, your specific situation, and how we might be able to help you out. With that, let's jump into things. So let's take a look what's coming up this week. We're looking for the U.S. trade numbers for April. We're looking for the Canadian numbers. We're also going to be seeing inflation numbers coming up. We'll talk a little bit more about that. So far this week has been pretty flat in the markets. We've seen things open a little bit low this morning, bouncing back a little bit towards flat, not too much moving on. A little bit of bond selling off as investors are looking at that Fed Reserve being more aggressive. We are expecting another rate hike, obviously, just to tame inflation. But the rest of the year is starting to come into question as to what that's going to look like. The inflation data is due out on Friday. Obviously, everyone's going to pour over this information. We are looking for it to come down a little bit from its previous forecasts, as we have seen some movement on the price side of things. It really depends on which inflation we're looking at. Obviously, we look at the core inflation where you strip out food and energy. We're looking at it coming down. Food and energy and fuel obviously still staying up there, exacerbated by the Ukraine-Russia situation that continues, and we don't see any immediate end or resolution for that in sight. Other things going on. So just touch base on. Everyone knows I don't like talking about crypto too much. But I will touch on, there was an investigation by Reuters that came out and looked at Binance as one of the biggest cryptocurrency exchanges, and it's become a hub for hackers and fraudsters and drug traffickers. We've seen a lot of fraud even in 2022, but certainly over the last couple of years around cryptocurrencies. People having their wallets stolen, having rug pull scams and different coins coming out. And in fact, this kind of investigation looked at a 5-year period, and they just looked at the Binance exchange. They didn't look at any of the other ones, and they found that it served as a conduit for at least 2.35 billion of money laundering and illicit funds. So this goes back to my comments even last year when we were talking about the crypto markets and kind of when they were heading upwards. The big concern about investing in crypto, for me anyway, is certainly around regulation. What are countries going to do? And we've started to see different countries come out with more regulation, some very strict, some just starting different aspects of regulation, but getting more and more serious as they move along to try to stem that type of behavior and that type of illegal conduct. And I just see that continuing until they regulate it down to basically a currency, and at that point, does it lose the luster of being a crypto market? Obviously, there's still the issue of scarcity when it comes to cryptos. They do have limited supplies, but that being said, there's a lot of supply still out there. Anyway, we'll keep watching, and any other big news on the crypto market, we'll talk about it further. Canada's moving to bulk up their antitrust muscle. May not be the root of the problem. The U.S. did this last year, trying to deal with all the M&A activity we've seen over the last few years. We've seen industry after industry start to consolidate. We saw it in the energy sector. We're seeing it in the medical. We're seeing it in the tech sectors. Fewer and fewer choices for customers. Big example here in Canada, of course, is the Roger and Shaw merger. given less and less choices to Canadians when it comes to telecom. And Canada is a great example because Canada is one of the most expensive mobile phone bill payers in the world. And we're forking out a ton of money. We're also one of the biggest for your everyday banking. Continues to be very costly in Canada. And that's a pretty tight market in Canada. The banking sector with the top five pretty much controlling most of the market share. So consumer advocates are out there saying we need to have better antitrust rules. We'll have to see if that's going to work in Canada. The Canadian market is very different than, say, the European or US market, especially when it comes around size. It's hard for companies to compete globally, on a Canadian scale compared to the global scale. So that consolidation has let them become more competitive globally. However, it has limited the choices here in Canada. So we'll have to see where Canada takes those antitrust rules. As I mentioned, the US kind of beefed theirs up, and we saw a lot of M&A activity ahead of those new rules coming into place. America is split on nuclear energy. So obviously there's a lot of talk around, less fossil fuel, less greenhouse emissions, more efficient energy. And nuclear energy checks a lot of those boxes. It obviously has some downside. And one of the big worries out there is safety. The safety worries linger. And, there have been instances in the past where, the safety around nuclear has been mishandled. Obviously, Chernobyl, 3 Mile Island, and others, close calls out there that have Fukushima, obviously, have people concerned. But more and more, the Biden administration is pushing billions of dollars that way to try to revitalize that industry, to try to bring back some energy efficiencies and green energy, if you want to look at it that way, to the US and make them less reliant on fossil fuels. So we'll have to see how that goes. The US, Poland right now is kind of showing 50-50 in the US as far as nuclear goes. Obviously, we've seen different countries around the world go more nuclear, and then Germany is a good example where they backed off. Other countries move forward. Even if you run a great safe plant, look at Fukushima. It wasn't necessarily a fault of the technology or the operators. It was a natural disaster. So there are some legitimate concerns around the safety and long-term viability on nuclear. Other news in the wealth world, Carl Icahn is dropping his proxy fight with Kroger. If you followed the lawsuit against McDonald's over the treatment of pregnant pigs or pregnant animals on the farms, he lost the big battle with McDonald's, so he's dropping his lawsuit against Kroger's. So it's an ongoing fight around the proper treatment of animals when preparing our foods. We've seen this with other big chains like KFC around chickens, and obviously that's not going away. So we'll have to keep a close eye on what the courts might change down the road, as it could affect profitability of some of these bigger chains who work on pretty slim margins. Biden is waiving the solar panel tariffs, also in a kind of green energy move on 4 countries. He's invoking the defense law there to hopefully stimulate some more manufacturing here in North America around the panel manufacturing industry. So he's waiving those for 2 years, try to beef up demand and affordability for people to convert to more solar energy at home and industry. So we'll have to again see what kind of uptake we see on that down in the US. Canada's, we're seeing more and more of the solar stuff. Obviously, our climate is a little tougher, but there are areas of the country, certainly Vancouver here, and even Toronto has a lot of sun. Remember, it's not about necessarily sunshine, it's just, heat and light. These panels are getting more and more efficient, and we're seeing the numbers make a bit more sense as time moves on. Hedge fund Elliott is suing the London Stock Exchange for $450 million over nickel trading halts. So, a while back there was, in March, there was some confusion around the nickel trading market. We went to chaotic movements in March, and the the LME shut down temporarily or suspended trading in the market while they figured it out to make sure it was a fair market. And the hedge fund feels that they missed out on some opportunities in that and are blaming the LME for shutting down too early or unwarrantedly and are pursuing this lawsuit. So we'll see where that ends up. Usually the exchanges have policy in places around the shutdowns or suspensions. So as long as they follow their policies, it shouldn't be an issue. Becton Dixon to acquire Prada Systems for over $1 billion. So again, another M&A we're talking about, not so much in Canada, but Becton said to acquire a Prada Systems for about $1.5 million all-in cash deal to expand their pharmacy automation. And we've seen a lot in the pharmaceutical space over the last, I want to say 6 to 8 months, as more and more companies try to beef up their offer. And obviously, through the pandemic, there's been a lot of money to be made through the vaccines and through treatments and other medications. And it's not limited strictly to the COVID-19, but more and more, as we've seen these companies make more money through the pandemic, they're spending that money on bigger acquisitions. So let's take a look at what's coming up this week. Coming up, as I mentioned, U.S. trade data is coming out. We are looking at to contract a little bit after the earlier month was pretty big, almost 110 billion. Separately, consumer credit for April is likely to have risen about 35 billion after a big jump in the previous month as people jumped on the tail end of cheap credit as we continue to see costs of borrowing going up. We're also seeing the Chilean bank is expected to raise their country's benchmark interest rates by 75 basis points to 9%. So, as much as we've seen our rates go up, we should be thankful. We're nowhere near the 9% rate, and they've taken that up from an 8.25% after they already did a previous month hike. We're also seeing that Chile expected to post copper and trade balances data for the month as well. Other U.S. top news. This is interesting. Apple is diving deeper into autos with softwares for your dashboard. So we all have CarPlay, but in most new cars, you can plug your Apple devices in and have your CarPlay integrated into your car. And in certain vehicles, you might have even seen your dashboard integrated with Google. So Apple's moving to roll out a slew of new features and collaborate with car manufacturers to offer the similar Apple platform as opposed to a Google platform. And rather than just a CarPlay feature, it would actually be an integrated Apple device, basically like having your phone on your car. So we'll have to see how that rolls out. Obviously, it's a new move for Apple to kind of be the operating system for a vehicle. Google has done it for many vehicles, so we'll see where that goes with Apple as they roll that out. And the continuing saga around Twitter with Elon Musk as he threatens to drop his deal for the $44 billion offer to acquire Twitter. As we've talked about, the market's been signaling this for a while, obviously with the $54 a share US takeout price. Last I looked, it was trading somewhere around $39 a share. Pretty much the market saying it's not going to happen, or if it's happening, it's not going to be at that price. The justification for this is around the number of spam or fake accounts that exist on Twitter. This is no surprise. Everyone who's ever been on Twitter knows there are fake bots out there. Twitter does have policies and system in place to shut down those accounts as quickly as they can and as many as they can. So the big battle is to how many of them actually exist. So of all the Twitter accounts, how many are fake or bots as they're called? And no one really knows. Twitter is declaring somewhere around 5%. Elon Musk is asking for data to prove that 5%. And Twitter has legal reasons as to why they're not divulging that or giving it the exact data. Mostly from what I've read around the fact that they're constantly closing these things down. There's no exact number on any one particular day that would be accurate a week later or a month later. So they work on approximation, which is around the 5% mark. So Musk is pushing this as an excuse to get out of the deal. Will he be able to? Well, he can't walk away. There's a $1 billion breakup fee for him to do that. Could he renegotiate? There's a possibility. Could he fight for not paying the $1 billion because of this? Maybe. There's also, as we mentioned in previous weeks, there is a lawsuit out against Musk from Twitter shareholders that he might have used his Twitter account and this takeover. All the trolling he did, all the posts he did around this Twitter takeover, to manipulate the price of Twitter itself. So we'll have to see kind of how this plays out and if he actually goes through. As I said, the market is pretty much forecasting it's not going to go through, at least not at the $54 a share or $44 billion acquisition price. China, the government of China has concluded their cybersecurity probe around Didi apps and other ride-hailing apps in China. So if you followed this, they did the big cybersecurity probe to see, where the data was going, if it was going back to the US or other countries. So they finished that. So they're going to start to allow Didi and other apps to go back onto devices in China or on the app stores, domestic app stores anyway. So if you're not familiar, Didi is kind of the Uber of China for ride hailing. It's one of the biggest ones they have over there. There's the continued bid and war around Spirit Airlines and JetBlue. JetBlue sweetening offer. Again, we covered this a couple of weeks ago. So JetBlue made Spirit Airlines made an offer for JetBlue to buy them out and merge. It was rejected. It became a hostile takeover. Now they've sweetened the price or up the price to take them out and merge the two ultra low cost carriers. And we'll have to see what comes out of the vote from the shareholders later this week to see if they can move forward with a deal. Canada's news on the other side. Dubai selling a minority stake in their flagship port. So this is good. It's a Canadian pension fund is investing in Dubai flagship, one of the flagship ports, which is pretty much a kind of a cash flow kind of investment and pretty stable cash flows for major ports. We'll have to see as we get more details on this. The Dubai port is using it to cut down their debt massively that they use to build out and expand the port. On the exchange side of things, US dollar hedged a little bit higher as stocks in Europe fell. Again, the flight to safety story still continues to play out. We see the currency pretty much expected to stay there as we still have this fear of interest rates, and we're still looking at the US economy solid for now, but keeping a close eye on it and really waiting to see for what the Fed comes out as far as the language goes after the next hike. Sterling was a bit lower. There was a big no confidence vote in Europe. If you followed this, Boris Johnson faced a vote to stay in power, and he survived that with a 211 to 148 vote. So he remains prime minister. Pretty close though, given it's his party vote, and a good chunk of them were looking at taking them out of office. And this is obviously over Partygate, where over the holidays when Britain was in similar lockdown to where we were here, especially around gatherings, keeping gatherings small, and what type of contact or what type of hosting you could do, and they were found guilty by the police. Boris Johnson was found guilty by the police and fined for holding, parties that broke those rules. And in fact, some of them sounded pretty wild, but he remains in power, so we'll have to see what happens with that. On the commodity front, oil's price slightly higher, around 118 US last time I looked. So still hold it very strong. Remember, we talked about oil quite a bit last week. We like the story. We still think oil prices are going to hold strong. Supply is still constrained. It is creeping up a little bit. OPEC Plus is starting to increase targets through the summer. And depending on what happens with the Ukraine-Russia situation, obviously we're going to have to keep a close eye on that. As I mentioned last week, if you've done really well in energy and you're overweight, it might be time to start trimming. I'm not saying getting out of your old positions. They're still setting the new highs. I know our Exxon positions hitting a new high for us. So still really good investment. I'm not saying get out of it. I still like the story, but it's always good to take some money off the table when you've done really well, especially if you really overweighted oils in your portfolio. Base metals weakened a little bit under the pressure of the strong dollar. And really, this should be happening to oil as the dollar goes up. We should see oil weakening, but again, that supply pressure is keeping it high. So, so we'll continue to see base metals weaken a little bit, and that's probably going to stay the story as long as the US dollar continues its bullish trend. So with that, that's all we have for this week. If you have any questions, go to Mike on Money. I will say we won't be doing next week our live update on Tuesday. We are, if you notice the background, things are a bit brighter. The sound hopefully is better. We are in our permanent digs after moving or having our office renovated. So we're back. So we're going to be changing the format of the videos. We're still coming at you with regular updates and commentary, but we're going to come out with some new formats, some more interviews, some more specific topics for you to listen to, and then our regular updates on the market. We're actually going to focus more and more on portfolio construction and what we're doing in the portfolios and give you more updates around that. So I will come out with all our updates, and thank you for all the feedback that we've gotten, which helped us kind of revise how we're going to roll out the new format. But we'll have that out in about a week's time to you. But look for that. As always, you can go to Mike on Money. You can find the replays or subscribe to the podcast, because all these are on podcasts as well. So with that, thank you very much. Hopefully you have a great week, and I'll talk to you again soon. Thank you all. Take care.